So let's keep the conversation going, I should say. Joining us from Phoenix, Arizona is Tanya Marchiol. She's the CEO of Team Investments. And Tanya, tell us what these latest housing figures mean for the country's economic recovery, would you say?
So housing is still absolutely a bright spot in the U.S. economy. A lot of us actually thought that existing home sales were going to be a little bit lower this month due to rates, and they were actually up 1.7%. Now we were at 6.5%, so it is down from 6.5%. But I don't think anyone in a good financial market thinks that things on a straight up arrow are how it's supposed to be. We want to see housing stabilize. The housing market went way down, it came up, and it came up fast, and now it's starting to stabilize. There's data all over the place. So you have to understand that this data is good. When it's up a little bit, down a little bit, that means stability in the housing market.
Okay, so you bring up the 1.7 and the 6.5. What is the sweet spot? Where should we be?
We want to be over 5 million homes, and that's exactly what we're seeing. So that's a good thing. The day before, it came out that home starts were down. But when you look at why home starts were down, it is really because the construction permits are running at 60 to 70% of what they were between 1990 and 2012. There's data all over the place that we could look at and say this market is fabulous or this market is terrible. But what you have to realize is that we want a stable housing market, and we are robust compared to what we were when we crashed. And that's a good thing. People are buying homes, and yes, it is a lot of investors. There's still a lot of investors buying homes, but really that first-time home buyer is still on probation. They can't buy yet because they either short sold or foreclosed, and we don't want bad buyers back into this market. We want really good buyers that put down a down payment, that have a credit score, that want to buy a home and take care of it and pay on it.
What about, Tracy just had in her report a man who mentioned that, it used to be all you needed was a pulse, and now the pendulum swung in the other direction where banks are afraid of their own shadow. When is the pendulum going to swing back into the middle, and how much of that is preventing the market from really taking off?
Quite a bit, but with this rising rate, even though, and you have to realize that rates are still so low compared to where they were. I bought my first house at 10 and 12%. So 4.5%, which it did go down today a little bit, that is still an extremely low rate, but it is difficult to get. We're starting to see that loosen up. And with a rising rate, we're going to see the regional banks come back a little bit more and create programs. Today, I was just caught up on a program here in Maricopa County, which is in Arizona, where home buyers can get a 5% down payment assistance. That blew me away because that brings us back to 100% loan, which we don't want to see 100% loans. We want to see people have skin in the game when it comes to housing. So there are things and programs that are coming back to make lending easier, and we are going to continue to see that because they have to deploy that money back into the market.
Tanya, I bought my first house, it was 10.5%, and I thought that was a good deal, so I agree with you. I remember those days. What about the foreclosures? How much of that is still an issue, and how much more needs to be done in terms of cleaning that up?
Foreclosures were actually down 44% for the month of August, so that's good. And I heard it put best when he said, the flood is over, but there's still a lot of cleanup to do. I think that is a great analogy. We still have a lot of homes, 1.5 million homes, in some sort of underwater state. Now, some of those homes will just naturally come out of that as home prices continue to rise, and some of those will continue to be foreclosures. But there's enough buyers in this market. 30% of this market is still a cash market, and mortgages were actually up. Mortgage applications were actually up 11% last week. So buyers are coming back to this market, and we are going to continue to see that first-time home buyer come back as they can buy again. A first-time home buyer doesn't mean a first-time home buyer. That's someone who hasn't bought in the last 3 years.
Tanya, you're a pretty upbeat person. What do you want to see in order to say, yeah, the recovery's here?
The recovery is here. It's the new normal. So 4.5% is the new normal. I don't think that any investor, any home buyer thought that the 3.5% rates were going to last forever. If they did, they were living in la la land. So 4.5% is the new normal. This is the recovery. We are seeing people buy again. And even though there's a lot of renters in this market because they have to rent, that's great for an investor. Here in Arizona, we're seeing people buy homes at $100,000, rent them out at $1,000 a month, and that is incredible cash flow. When those people go to put that home back on the market, that's going to be inventory for that person who can buy again in 2 to 3 to 5 years.
Tanya, I hate to interrupt, but I have to ask, and we've only got about 20 seconds, your reaction when you heard the news yesterday that there wouldn't be any tapering?
Shocked. I don't know how that's happening. It really means that Ben and the whole feds don't believe in this economy yet. And so it gave people the opportunity to buy houses at a low interest rate. So we're going to see mortgage rates go down a little bit again, which is great for the housing market, but long term that could be detrimental.
Tanya Marchiol, always a pleasure. Thanks so much for joining us. Tanya, joining us from Phoenix this evening.